Hello everyone, Jesse Webb, TradersPro. Market conditions remaining bullish in a bull market. The rank of that overall bull market, we're currently seeing it right here at sitting. That's the line that we're looking at as far as this number right here, 12.54. So starting to turn that corner off that downtrend, starting to move back up, but we are certainly at the upper end of the range. If we come down here to our shorter term indicators, we're seeing spikes across the board in sentiment, breadth, and momentum. Oftentimes when we do see that spike that's looking like this, and we see that momentum first, and then we get breadth that catches up, now we're getting momentum, which is starting to catch back up again. All three are at the top end of that range, and you can see the price pattern on S&P 500 right here is just straight in the air. It has also had this 5-part uptrend, which is typical of a really strong rally or really any motive wave or trending wave. But now we're to the upper end of this range. We know that once we get to this range, it's just not sustainable, and we certainly could pull back into this bullish range, this bullish trending range, with a smaller counter trend and continue, but oftentimes we pull back a little bit deeper. And now that we've cleared above this area significantly, we could be watching for a retracement on S&P for some support. We'll look at a little bit clearer chart here in just a second on that SPY chart, but we're seeing all three of these shorter term indicators extreme to the upside. That just warrants caution right here that this current trend is not going to remain this intense without some kind of a pullback. We did see the buy-sell ratio spike, massive move on the buy-sell ratio, which is good because it's also confirming kind of an exuberant potential blow-off top right here where we're getting everybody pulled back into the upside. And it creates that it's a really strong momentum move still to the upside. It just needs a little bit of a pullback. So now we're seeing buy-sell ratio back up to 5.5, and the width of this, as we've talked about this often over the last few months, when we start to get these wide zones right here, they're just not sustainable. This one has been another odd one, just like this bearish one was a little bit odd. This one was oddly long. This one was oddly spiking. We had a new high on the market, and then a new high on the market, and then a new high on the market as well. So it's continuing to work to that upside, but again, we're at the upper range that becomes an unsustainable trend. We could see, another day or two of spiking in this momentum to pull this to the upside. It doesn't have to get there. It's certainly inside, close enough. This could just really be considered a zone anywhere up above 80 where we start to get in this overbought range and could be due for a pullback. Now, what does that mean? Ultimately, when we're looking at market conditions and sentiment like this and some of the internals, it's just talking about how to adjust any type of portfolio strategy that you've got currently. It means that we're at the upper end of the trend. What does that mean for you? If you've got winners, you may consider tightening up stop losses. Don't sell those winners unless they've added a large percentage to your portfolio that you need to rebalance those. For example, you've got a stock or two that are up 100%, and you want to sell half the position at that point to just put some of that back into cash, even though those stocks are working. Things like that. Selling the losers. Anything that hasn't performed well for you in this uptrend probably won't perform well for you going forward. At least if it's not like a gold stock or an oil stock, you can trim those back in these market conditions. The indexes here all really, really bullish, really oversold, bullish to the upside. Buy-sell ratios just really strong right here, which is great. Things are working. The economy, or the stock market at least, and the Fed and interest rates, a lot of those things are starting to become a little bit more clear for the market as a whole. We've seen bonds have a real big rally. Let's see what they did yesterday. We saw this 20-year have a really big spike, and a couple of days ago when we had that Fed move or that Fed announcement, and we're seeing that here again. So we had both real big moves on TLT, the 30-year or the 20-year ETF, Treasury ETF, so up to the 618. This is a really major level. Sorry, I lost lost the word I was looking for here, but it's a significant level of support resistance just because we've been at these major bounces back here straight up. All of them have been significant and there's been some kind of a reaction, but we made just a really quick trip to that $99 level on TLT. We're to the extreme here on bonds as well. So these could be areas, again, just for watching for opportunities to tighten up the portfolio, deciding how you want to lock in gains or remove losses, raise a little bit of cash, and watching for a pullback and an opportunity to continue to buy into this overall uptrend. Sectors also looking strong. Let's take a look here at the sectors ETF group. Actually had energy have a real strong bounce, and so we've got everything bullish across the board right here. Let's take a look at those. At that big move that we had yesterday in energy. Let me go to this perspective so you can see that move. So we've talked about this range where we're down inside of this retracement area. We've got just a bunch of support right here from all of this. And so we did get a reaction, big move in oil yesterday as well. This is not oil, but it is the energy sector. And so let's take a look at oil because that was really the driver of that move yesterday. USO, which is the ETF, and had a bounce up, similar move, 3%, back up to some resistance. So 67 on USO. So we'll see if we catch some resistance now on this location right now. The 618 retracement still has an uptrend intact, and finding some support inside of that zone. That's USO. That is the ETF for oil. If we take a look at gold while we're here, that has also had a decent move the last couple of days with everything that's been happening, and back up into that momentum zone and also a back up into the buy zone bullish trend. Let's take a look at a few muscle stocks for today, and we've got AUGX, which is in that upper momentum zone. Not a real strong confirmation bar. Lots of resistance right here. If it could break out above that $6 range, would probably get some momentum from these locations right here. Let's add in just another look here. AUGX. Next stock on that list was EH, Aerospace and Defense. Pretty volatile move, had a big gap here with some big volume, retraced that, and now it's working its way back with some momentum towards that upside. Same with ANOD. These are not yet momentum stocks, meaning that they're still retracement stocks or corrective stocks where they're retracing and correcting a big move, and they're working in this lower zone, 50%, 618, versus working in this upper zone. They're a little bit different scenario. These are still fine, and these are still good trades to work in, and they actually can be even better because you catch a little bit earlier trend, but there's still resistance zones along the way. They could counter trend back and continue the overall downtrend, versus a stock that's already in this upper momentum zone has less resistance. There's less overhead resistance for a stock up here than there is a stock trying to work its way back up this direction. So as you're looking through and just trying to decide which ones you want to work on, those are some things to consider. Let's see if we can find, there's quite a lot of these really high-ranked stocks that have had deep retracements. This stock, actually, keep an eye on that one, SMCI, because it was a big mover back here on a lot of its computer storage, and in that world has been anything in storage or tech or hardware or anything has been moving nicely. AI, this stock has been jumping all over the place. I know you've heard about this one out there. I've done several reports on this. This is a really solid bar on that today. It moved up, gapped lower, had a really big igniting bar with volume. It's a little bit deeper in the list, but still a high-ranking stock for you to consider. Go through that list today, see if anything works for what you're looking for in terms of adding to a portfolio, adding to the overall process, and that'll do it for today's update. If you don't have full access to the software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.